Hello, fellow traders. Curtis from Beyond Backtesting here. So today I want to talk about trading trials, some psychological problems that may be impacting your trading. Certainly, we'll be doing analysis of why I'm having such a difficult time passing those trials. Going to be delving into psychology that may be relevant for your live trading, or if you want to pass one of these trading trials companies. And talk about markets. Today we had some really big swings. It's 3, 8, 20, 2022 and very large swings, testing highs, testing lows. Obviously, a certain type of trading where you're waiting off market might be conducive to that. For me personally, it was challenging, was profitable, but challenging. Certainly not profitable to the extent of the range. Came in, I think I put about 500 in the morning session, gave back part of it in the evening session. We'll talk about that. But I mistook movement for opportunity, closed with about 330 on the day net. And yeah, so difficult for me. My algos were producing. One of my biggest problems was my NT8 platform was lagged. Highly recommend that you put a rhythmic beside your platform, make sure it's not lagged. That I recognized this in the morning and didn't lose for it, but in the evening I did not recognize that, and that may have contributed to my losses. But frankly, psychologically I got anchored at some points where I shouldn't have. I had some psychological anchoring, and didn't quite stay agile enough. Was running up trade fees a little bit more than I wanted to, and was recognized I was pushing up my gross but not my net profit, and decided to pick a few places to make a stand, so to speak, and kind of got run over more or less. Um, my algos, I always trade the context of my algos, which helps me. Situational awareness was the key today, and here's my setup for situational awareness. This is my current setup. I really like this. I have a vertical here. I have the daily. I have even this I can switch to if I wanted to. This 5 minute. But here's the key. I have my signals here. I have my algos here. It might be hard to see, but I've got colors that give me signals. Always trying to trade in the context of an algorithmic signal. Sometimes I have to ignore the signal or trade the opposite of a signal, that psychologically can be difficult. But often when a trade doesn't work, you'll get a fast move the other way. But I'm always trading in the context of those signals. So here's my live performance, my real money performance, excluding the big blow up day. I had a big blow up day. I think it was Thursday, and we can see I'm generally profitable. And what makes me think I may have a method here that can work is that I'm rarely down much in my trading, except when I have that when I'm not disciplined. But I'm not holding losses. I'm not holding loss. My daily loss at 600. I'm usually not down more than 100, 150. I'm maybe put up 2, 3, 4, 500. But I've got some problems I got to address. So here's my cumulative drawdown stats as well. My profit factor is not shown here, but it's around the 2 for both my long and short entries. This looks promising to me. Obviously, it's not a lot of data. It's just a couple days, and I did have a blow up day. But this looks to me like if I continue to do this, I could build this. And I'm just shooting for very modest $300 per day profit objective, and a hard stop at 600. And the down was hit my 600 before I hit and then I had the drawdown. And I was really thinking I shouldn't have the hard stop at 600 today, given how much it's moving. It's kind of silly to have a hard stop at 600. I could put up a lot more than that with the way the market's moving. But I'm gonna come close to hitting that 600. Then the market changed, and I just did not. I recognize the change, but I did not adapt to it in the proper way. So this is before fees. I think this is before fees here. I've added fees going forward, but they don't apply to this. So we see that, and then so we want to talk about some of the problems I've been having the trading trials. And given we see a performance here that looks like I'm on the path to passing with real money. I've got to address the psychological problems that go into this trading for me failing these trading trials. But first, before I go into the psychological problems of my passing the trading trials, I'm going to, and I think just one moment, I think I discussed that the lag was a problem. So be sure to have my platform was lagging a lot this morning. I think I shared that, but I don't remember now. So be sure to have your rhythmic up when you're trading, and that also was another factor that caused me a problem in the evening. this evening was a lag. I didn't recognize it. I recognized it in the morning, but I didn't recognize it in the evening. My signals were producing fairly well, but again, I had problems with the run up the gross profit, but the fees became an issue as I was in and out, trying to be so agile. So that was kind of what led to that. But yeah, maybe something I have on my platform, like the tick refresh or something. I'm going to have to examine that and find out why my NT8 platform was lagging as well. Okay, so trading trials, right? So I'm going to address some of the psychological problems I've had, and I think it may be relevant. These ideas, if they're in your trading, you may want to examine them. But first, I want to start with just why even bother? You know, why am I trying it? Why am I doing this? Right? Why? Let's just call it why. The why. Because in my case, I have the capital to trade. So it begs the question, maybe I shouldn't even be doing them, right? And so I got to ask why. So one reason I was doing the trials is because even though I have these signals and I've been doing well in my live money, I haven't tested the signals to the extent that I'm fully confident in my ability to do this. I have a long history of trading and a good ability to trade historically, which is why I'm willing to try it. But ideally, I would want, if someone came to me and said, hey, I've got some signals, I've got this, am I ready for the live? I'd say, not until you've traded those signals, that method, for at least 3 months. So one thing is, I would say I don't have several months of experience with my current setup, so to speak. Now I have an extensive trading experience, and that hopefully gives me some edge, so to speak, some ability, if I have made mistakes, to not realize those mistakes completely, but there's no guarantees. So that would be one reason. That's a valid reason. Two would be, the second reason is this idea of, credentials or validity. Now, obviously, passing a trading trial does not mean you're a great trader, but it does, I think, speak to some ability to, depending on how you do it, and if you're able to get withdrawals, it speaks to some ability to trade that most of us cannot achieve, or many traders cannot achieve. And I think that does give you some credibility, right? Let's call it credibility. As most of my topics are on system trading, I don't know how relevant it is for my audience, but I think that must have played a role to some degree. Is, hey, if I could pass it, I could have some credibility. Although I don't know that it's, unless you're able to also withdraw a large amount, I don't know how much credibility it gives. It's certainly something. It's certainly some achievement. But the real question is, can you consistently trade and get to withdrawal? So that's the real key to that. And three, and I think now we're getting to the psychological problems of what's been happening with me, is I wanted to be able to trade more aggressively and bigger than I can, than I'm comfortable with. I would be comfortable with. On money, my own money. And four, I seem to be trading well. My live money, don't seem to be having like psychological issues with the money. But if there is an advantage, paper trading, so to speak, I wanted to be able to get that advantage. And it really comes down to, when I look at all this, it really comes down to the primary reason is, to make money, to be able to make more money trading. Right? That's what it really comes down to. And I think the question is, so here's the psychological, here's the problem. Is that because just the combination that causes the problem. Here's the combination, here's your psychological recipe for disaster combination. When you take a very aggressive trading with aggressive position sizing, and highly. And when I am for 3, you don't need to dive this in, but as a third, we have extremely volatile markets. So here's your psychological combination combined with the environment, and this is your combination for losing, right? And I'm trading more aggressively because I say I can't lose much. So in my live account, I'm being more selective with my trades. And the tryouts, I'm obviously not adhering to the same. I'm being more aggressive because I want to pass quicker. I want to get in there and take more trades, and I'm just being more aggressive. But I'm also position sizing more aggressive. And it's this two combinations. It's the aggressive trading and the aggressive position sizing that is causing my problems. If you think about it, if you want to be trading aggressive position sizing, you need to be more selective with your trading. If you want to trade, more aggressively, you need to size smaller, very small in today's markets. Okay. And either can work, although trade fees so you got A or B. You can do A or B. But if you do B, keep in mind the trade cost, which can become a problem if you get too aggressive. So there still needs to be some selectivity. Even when the market's moving a lot, you can still get too aggressive and then losing money or just running your trade fees, which is what happened to me this evening. So this is the problem. And it comes down to my thinking about how I could grow an account if I could size a certain way or trade a certain way. But we recognize the type of markets we're in. You don't need but 1 micro, 2 micros, 3 micros, at most 5 to make a lot of money if you can catch the trades or if you can find opportunities. So I think it's this combination. I think that this combination is dangerous in any market, but it's catastrophic in the current markets. Most of my blocks trading 10 contracts, 10 mini contracts, right? I just don't have the ability to trade that. My methods, my signals, my setups do not allow me to trade that large, at least the way I'm trading it. Now, maybe I could develop that method, or in certain environments, in a very strong trending day where the market's moving in my favor, continues to move, maybe I could do something with that. But it's just not working in this for me with my ability, my signals, my trade abilities. I have very tight stops on some of my signals, but they're not that tight. I can't make them that tight. So that's the problem. It's aggressive position sizing with, here's the problem. Aggressive position sizing and aggressive trading, aggressive entries. And if you do this in your trading, and I think it comes to me thinking about how a professional trader trades, and not necessarily knowing, but just think, okay, a prop trader is going to be real aggressive. And reality is, we can see that many of your elite traders are very selective, even more selective than I would be. Right? They're giving up opportunities. So part of this is comes to how we view what an elite trader should be, and that can be misrepresentative. The reality can be misrepresented, can be different than what our imagination or what our ideas, right, are. So, for example, if we imagine a prop trader is a trader who trades big and all this, maybe they do in some environments, but in this current environment, I'm sure there are traders who normally trade a lot bigger who are trading smaller. And when the market gets volatile, that's the natural thing to do, is trade smaller. Right? And with the macros, unless things get a little bit more volatile, there's almost no chance, no reason you should say, well, the market was moving too much or the contracts are too big. You were just trading too big, right? Okay, I'm back. Sorry about that. So if we have this conception, this is where we have to analyze what we believe about trading, so to speak, right? So if we have this conception or this ideal that a trader always trades big or aggressively, right? Aggressively. And we're trying to model that, or at least somewhere in our mindset, and then that can be a problem when it doesn't suit our trading or the current markets. And so what we should, an exercise or practice, and this is something I should have thought about a long time ago, actually, because I used to use this practice, was to imagine the perfect trader, or the ideal trader, or the perfect trader, or how, an imaginary perfect trader, right? And how they would be trading the market, and that used to help me keep on the right side. And we can also take this. I used it as a practice of thinking about what I should have been doing, a moment ago. At least if I knew what I should have been doing a moment ago, maybe I would know what to do now. And this is a practice you can use in your trading, certainly in that respect. Imagine this trader is looking over you and say, okay, and watching you, and I've used that before to good effect. But we can also take this idea and think about what we want versus what we don't want in our trading. It's a topic I want to talk about, maybe not completely in this blog, but what if we imagined a prop trader who is super selective? And we know that some traders are super selective, not very busy, right? It takes very few trades. Okay, very selective, gives up a lot of opportunities. Now, that is kind of contrary to how most of us think about being a good trader. All he's missing opportunities, he's giving up opportunities. But think about the other side of that. If he's very selective, he's having a very high win ratio. It kind of may be useful to contrast that with any type of stereotypes or ideas we might have. And so that's a practice we may want to think about. Is thinking about, okay, a trader. Imagine a prop trader who doesn't always trade big, or sometimes trades small, right? Because the market conditions warrant trading small. Think about a trader who's flexible, who's adaptive, who's again very selective, very patient, and that may help to contrast this idea of the aggressive trader who's always winning. Because when you get too aggressive, necessarily your win ratio is going to go down. And if you have very small trade fees, or if you trade small, you may be able to trade more aggressively, but you don't want to be sizing more aggressively. And if you size aggressively, you don't need to take very many trades. You'll be hitting your profit target. So it's this combination that has been my problem with the prop trading the prop firm. And really, the prop accounts is I've been more aggressive. It's really been three things, right? Which is one, I said, okay, what's the cost if I'm wrong? I'm not like I'm losing a real trade. But over time, it adds up. And it's added up for me now to where I have to really analyze it. I have to either pass this or cut it off because the money's adding up and the reward's not going to be that sufficient enough. So one, what's the cost? So because there's not much cost, so here's the recipe that has caused me problems in the prop account. One, there's not much cost, or this is how I perceive it, not much cost to blowing out. So I'm going to take more. So I don't have as much. I don't have as much. I don't place as much value on taking higher quality trades. So I'm taking lower quality trades because of the perceived lower cost, right? Taking lower quality trades. And then, two, I'm trading. So that's leading to, more frequent trading. All this is leading to more frequent trading, right? And two, I'm trading larger because I want to see, I'm trying to trade larger than I would in my personal account. I try to do things that are bigger. And this is combination. This is your recipe for disaster. It's basically, okay, first it says, okay, not much cost in losing. Two, I'm going to trade more aggressively because I want to pass fast. Three, I'm going to trade bigger size because I want to grow the account and because I want to be trading in ways that I might not trade with my personal account. And it's all these combinations that leads to losing in these tryouts. So addressing each one of these, okay, is recognize, yes, there is a cost to losing, and setting some stronger requirements for reset, maybe a week wait versus a day, maybe 2 weeks. So impose higher cost and recognize that losing repeatedly adds up. 2, trade aggressive because I want to pass fast. Set a goal to pass slow. Okay. Set a goal to pass in the way you will trade the live account or the funded account. Trade bigger size. Now this is, I believe, one thing that the prop account does allow for, but not just crazy big size. You have to have a scaling plan. It has to be disciplined, right, within the context of your plan. So these are the 3 solutions to the 3 problems. Okay, so this is your solution. And if you're trading too aggressively because you think that that's how you win, you may want to create these ideas or imagine these traders who are trading more selectively and the benefits of trading more selectively, trading more patiently, trading in different ways for different types of markets, trading maybe in different ways, right? And sometimes maybe you trade with larger size when the risk is low, when the confidence is high. Imagine also a trader winning when he trades small because he's not getting stopped out. He's able to stay with the trade. There are many ways to win at trading. There are many types of ways to win at trading, many types of trading that can be profitable. But sometimes we get these ideas that can be harmful. Trading too aggressively. Everything's aggressive, right? Getting too, think about what we want versus what don't want in our trading. You want to be more emotional, less emotional, right? And trading very aggressively is essentially trading more emotionally. Think about it. It's more emotional. Now, I don't want to be trading indecisively, right? We need to be decisive. That's not necessarily aggressive. Decisive is trading aggressively when there's a signal or context. That's decisiveness. So this is how I'm going to approach it. The other thing is, here's the other thing. So it goes back to why I'm doing it. And really, it's this idea, okay, I could trade it more aggressively. I could scale it up faster. But also this idea of multiplying. And I could do this with my current capital. So this is something, this idea of multiplication it's very easy. I won't say it's very easy, but it appears to be very possible for me to hit $200 to $300 almost any day trading. And I struggle when I try to hit, it seems like I start to struggle when I try to make more than 600. And so one of the ideas with I have these prop accounts is if I have my personal account and 2 prop accounts, let's say I'm just hitting for 300 on each account, is 900 a day. It's 300 times 3, right? So this is kind of my idea for getting funded. Is I would have multiple accounts, and this is another idea. Versus trying to trade very aggressively, is why not just trade? I know I can put up 200. That's 600. Probably can put up 300, but I know I can put up 3. So this is this other idea of, and I don't know if it's psychological. I don't have an answer for it, but I know that if I get in and I can put up $200, the problem is that if I put up 200 quickly, or the problem is I want to put 500 to 600 or more. And it's probably psychological. It probably has to do with maybe trade sizing bigger, taking less trades, and that would be one approach to it. But if that's a psychological problem, then trading multiple accounts is a potential alternative solution. Now, what I could do is just trade multiple accounts of my own. I could fund multiple accounts, but then I'm multiplying the risk. Let's say if I can do this with, let's say I could hit 200 per day with a 400 daily loss limit, which seems reasonable. I'm still at 400 times 3 equals 1,200 on the day to produce 600. So now, given that I can produce 200 super consistently, it may be worth doing that. So this is another alternative. So let's look at, so this is another alternative to thinking about growing or trading the prop account more aggressively, is simply to trade more accounts, trade them the same way or even less aggressively than my live account, and I can multiply those profits. So this is another option, and that kind of segues into alternatives. I'll talk about some alternatives to prop accounts to pay trade tryouts, right? One is trade micros. Okay, the micros you can trade about 2K risk. 2 is trade. Well, we'll say 1 is to trade on the free sim or a rhythmic sim with NT8 and until you hit your goals. You can use market replay. You can trade in paper trade. You can paper trade live and market replay. Right? 2 is trade micros. I'm mostly trading micros in this volatile environment. And you can do that with, there's no recommendation. I don't provide any recommendation. Trading's risky, et cetera, et cetera. But I could trade micros for probably a $3,000 account. And the third alternative, if we're thinking that, like I was thinking, like I could grow my account, is to create sub accounts with and lower your goal per account, and use a trade copier. Now I place my trades through Rhythmic, so I don't have a trade copier for that yet. Apex does provide a trade copier for NT8, but it doesn't support Rhythmic, so I need a trade copier. If anyone knows how to do that. 4, right, is simply trade bigger your trades. So these are some alternatives to the paid trial, so I'm about to consider as well. I'll probably reset once more time, and depending on what I see, if I don't see significant improvements, if I see more discipline lapses, I'm probably going to have to say it's not for me. Simply because it's getting up to actual money. And you can see here, this is what I'm doing in my live. Of course, that can change. It's not a large sample set, 500 trades, not a lot of days. But I'm trading one the live, so maybe I don't need this. However, when I think about having an account, I could trade either bigger size, which now I'm really thinking about, again, because you have to have a scaling plan. If you want to trade bigger size, you have to have very specific setups and a very well thought and well developed scaling plan. So an alternative to that, it would be to try to pass these trials and not set a big goal on them once they're passed. Just say set $200 or $300 if I could, especially if I could pass 2 of them. Let's say if I could pass 2 of them, and I just say I set 300 is my target, but I could put a goal of 200 and on these accounts, and maybe 300 on my personal. And now we're doing 500. We're doing 400. The 300 is 700 a day. Okay. So that's some reasons you may want to try that. Some alternatives if you're not able to start winning on the trials, is to trade the sim, trade your Rhythmic, do your market replay until you hit the performance you want. Save your money. Start with the micros. If you can do that consistently, you can grow the micro account up. If you have capital like I do, and you're just trying to multiply your earning potential, maybe an alternative to doing that is to create sub accounts and trade those sub accounts with small. Copy those trades, or your best trades on those sub accounts, and set your goal per account lower. Again, it's a psychological thing, but if I were to say try to produce $1,000 a day, that would be more difficult. Even whereas if you said produce 300 by, let's just say if you said to produce 900, that would be more difficult for me psychologically. But if you said, hey, we're going to copy your trades to 3 accounts. 3 accounts produce 300 per account. That's a lot easier. And even 2, that's my standard target. Not difficult to hit for me, but if it's like 200, it becomes really easy. I can hit that maybe 70% of days. And that's a hard stop. It means I'm winning 70, 80% of days because I'm usually going to hit 200 on my first before I'm down any. So that's like it changes my win. I may not make as much. But that would really increase my win ratio per day to where it'd be probably 80% per day. And, what I've seen today was we had a lot of range, we had a lot of extension, and yet my net profit still didn't push up very high. And if you're a trader who doesn't push up big numbers on big days, then you may not need to take as much risk on those on average, because you're not going to make that much more anyway. A lot of traders who trade trends and things can push up big, very big days, outlier days. But myself personally, I don't have many outlier days scalping. And trying to have an outlier day was what caused me to give back profits, right? So this is the idea. And if you're trading for consistency, again, shutting down, having a hard stop on these accounts may work better than almost anything you could do. So this is what I'm thinking about now is going forward. It's just trading for a smaller amount and multiplying my profits that way. Again, it's the same thing if I were to trade larger size, fewer trades, but it's that psychology of not having to trade bigger, or as well being satisfied with just hitting $200, which it just seems a lot easier. Okay, hit $200 times 3 accounts is $600 on the day, and that seems very easy to do. Versus if you say 600, of course, it's just a change in position sizing. So that's why we said the alternatives, and that also explains the why. So this is how I'm going to reapproach it. I'm aware now that I was trading too aggressively with too big size. I'm going to size down. I'm going to create my scaling plan. I'm going to most likely reduce my target on these accounts to just like my live, or maybe even a little less. See if I can find a trade copier that will help me copy those trades. But now I'm thinking about this right here. If it doesn't work, or if I have problems passing, I'm probably going to step away from the trade accounts for a while, possibly, depending on my live performance, may create sub accounts and try to multiply them that way. So I hope it helps.